Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's July 8th. This will be our chart lesson for today. And in the end, what we had here was a big spike in channel. This was a FOMC news day. I haven't even looked to see what they announced. It really doesn't matter. All you want to do is follow the price action when it comes out. But normally I try to be done by noon on those type days because you never know what happens when the news comes out, and you can see it happen somewhere right in here. Big sell-off, and generally after a big news item, within before the day's over, they'll take most of that action back, or what'll happen is the market will pull back and to that same spot and kind of reset or start over and then move from there. Let me see. I think it's right in here. It's on one of these bars right in here when it started, and it was kind of all downhill. I didn't mark anything after that point. If you want to trade it, the price action is valid. But generally, you got to give it time to settle down. And I would say it didn't really settle down to normal until, right in here somewhere. And that's it's basically 2 o'clock then. So I generally don't mark anything after noontime on FOMC days. But in the end, it was just a big spike in a channel, in a two-tiered channel. There, generally what I do until I figure out the bigger pattern is I follow these shorter term trend channels. And you can see I've got them working all through there, and they work just the same for the most part. Sometimes if you get a break like we did, it worked out pretty good. But let me just make this a little bigger, and I'll give you an explanation of, oops, wrong way. Just to give you an example, sometimes you may get your break like right here, but if your trend line's lower, you may not get a new high on the retest because the bigger pattern takes over. And you can see this is an obvious two-tiered, even though we spent most of the day in the up. But yeah, I had a little interruption there, so I forgot where we left off. We were talking about the bigger pattern, but turns out it's just a big spiking channel, and I use basically the shorter term trend lines to keep me on track. And you can see how they worked out. We're coming down here. You had a break and a couple of legs down, and then you had one going up, a break, a move up, and then it turns down. You got a break here, a new low, then it turns up, a break here, a couple of legs up to a new high. But you can see the bigger pattern coming into play there, and I'm sure you can draw a trend line here and find the same thing. Let's just do it real quick. Generally, I'll draw it off those first couple of swings. Could be like that, but I think it's probably more like this right here, because you can see it kind of riding down that line there. Let's just see how it fits. You can see that was fitting on the other side as well. But you had your break and a move to a new low. All right, I keep getting interruptions, but anyway, you can see how that worked out. You got a break. It's a pretty big leg to a new move to a new low, but it's the same thing. Your clue that it could be coming to an end is the break, and it could be that maybe this is a two-tiered channel. That's always a possibility. That fits pretty well. Then you had your break. Attempted a bunch of times to make a new low. It never did really by the end of the close. There's just too much support across there. This is a pretty low point for the market right now. So obviously there's a lot of buying coming in, and that's what you look for when you get to a low point and a lot of buying comes in. Usually by the time you recognize it's too late and the market's already rallied. But if you want to catch these kind of rallies, that's what you do. You wait for the market to get to a strong support area, and generally when it's overdone like that, it's going to take off. And those are some great longer term trade kind of ideas. A lot of times I'll just buy an option or something because I don't like to be in the market overnight anymore. So I may buy an option or something. I don't do that much anymore. Only when the market's getting near important points that really stick out and are real obvious. So, but let's get off that subject. Back to the chart lesson. Let me go through the trades real quick, and we'll wrap this up for today. We had this big move down. Of course, we had the break and a couple of measured legs down. Then we had a big move up, a break, and a move to a new high. And that's pretty much one leg up, the correction, then another leg up. And we had a second entry long here that was fairly tempting. Um, if you took it, I mean, it's a little bit before 7 o'clock, I do believe. Yeah, but see, it's right before 7 because I was not really ready to trade. And I didn't want to, that's the worst thing you can do is rush into the office and you see a trade setting up and you don't really look at your chart real close and you just take the trade. So a lot of times when they're right on the borderline there, I'll just skip them because it's just an obvious one. And this one I wasn't so sure about, but I'm going to go ahead and circle that one because there is a long setup there if you wanted to take that. But when we made this double top basically here and had this kind of bearish type reversal bar, I like that for a short. Turned out to be a nice trade. And then we had two measured legs down. Then we kind of went into this right here. But notice this failed second entry long here. You're working down and you try to go higher once. You pull back. You try to go higher a second time. And you really didn't want to go long here because you're working back below the EMA. It's still making lower highs, but then all of a sudden you get this real bullish bar. So just sit there and see what happens, and it may take off and go up, and you have to miss a trade. But generally, what happens when you get something that looks too good to be true, it's not. And what happens? It breaks higher, it traps all these unsuspecting traders that don't know any better, and it turns down and goes just instantly got real bearish. And so that was a nice trap, and all it was good for was a scalp. But a lot of those scalps will be that way. And then it reverses and goes the other way. And there is a second entry long there. Well, actually it's not because you didn't really make a new high here. So you could almost treat that like a second entry long. But I think you're better off just to sit tight. And then I don't have my line across here, but let's put this on here so you can see it real well. But you can see there's some serious resistance right across there. I don't know if that line don't look right, and that's because it's not right. I still don't think it's exactly right, but anyway, you get the gist of it. There's some resistance across there, and plus you have your trend line. You should have drawn it on those first two swings, just in case. But either way, you got this possibility of working lower. And that was another reason you didn't really want to go long over here because you're working down. You're making higher highs and higher lows, if I didn't mention that already. But then this was the first break of this trend line. This trend line really, it was touched there and it turned down. So you really kind of got confirmed there. So you could have actually entered there. I didn't talk about that, but there's a second entry there if you wanted to enter there. But because it didn't break below and it didn't close on its low, I wasn't as excited about it. If you entered here and when it broke lower there, you could have added on. But if I hadn't already entered here and then I saw this, I'm just trying to think how I would be thinking if I wasn't already in. But I like this for an add-on. So yeah, I guess I'd probably enter there even if I didn't enter here. And that's a quick, easy move. But now you got your break of the trend line here. You can't go long because we don't have any retest yet, and there's a little trap there. You can't hardly see it, but let me move these. Notice that the market tries to go higher once, pulls back, tries to go higher again. So that's a failed second entry long. Just go short right there. And that's a great trade. And if you took this, you could have caught a runner and, rode it as low until you got whatever trigger you're using, until you got your target or your trigger that you're using to exit, whatever. There's really a second entry short right there off a double top, so you could have entered there. And if you didn't, you definitely want to enter on that trap, and that's another one you add on. So if you got two of these and got the add-ons, then you're good to go. You've already gotten 4 trades out of really a couple of setups there. So, so again, that's a double trade. Let me put another. Put that back where it goes. I still don't have it where it goes. It goes back over there. You really could have also maybe even treated this like a failed second entry short, but it's not a great setup. I don't like the signal bar because it was a doji, and then you got a reversal type bar, so I really didn't like that one. So I didn't mark that one. But then you got another pullback here, and even though this one a little lower, this is almost like a two-legged pullback, and that's a nice little reversal bar. Um, so I like that one for a short. It wasn't quite back to the trend line, um, but there's actually, I didn't talk about this one, but let me just, there's actually a little shorter term trend working down right there. And that's your first break, so there's a good chance you're going to get another low there, and that's another reason I like that one. It is very similar to a two-legged pullback. I think you don't want to risk any more lows after that, even though there's a second entry short there. I don't think you want to risk it. It would have worked, and then you get another little pullback and another short right there. But again, you've already had your break and a couple of legs down, and so it just gets really risky. So I don't think you want to take any shorts, and then suddenly you get that little failed break lower and you get that reversal bar. So I liked it for a long. And it moves back. Of course, it turns back down again, but it doesn't matter. Your scalp's good. There's a reason to consider going short here. Notice the double top that we made, and here's that gap. Look at my trend line coming. I don't have it drawn through. But there's that little gap that I always talk about. It closed on its high, opened on its low. It did tick back and fill it, but it's amazing how often you see that over and over and over. But anyway, I'll circle this one green because it's a trap. There's a double top and that failed break higher. If prices are going to go higher, they should have gone on and worked higher. It's a little bit aggressive, so I'm going to mark it green. But there is a setup right there for another short, and then it comes over here. You don't want to go long until you get that reversal pattern, which is generally a failed second entry short that comes back, and notice how it didn't shoot right through the EMA there, but it didn't pull back very far, and then it just goes right through. It keeps going higher. It pulls back. It tests it. There's your failed second entry short. Look at that big reversal bar. You can go long right there. This is another one I love adding on. It didn't take off. It pulls back one more time and then goes higher, and so you got a little trap, another trap there, and this time it's more than likely it's going higher. And so I like it, adding on, either entering there, and if you're already in, which you should be on that reversal pattern, go ahead and enter. And then when this thing touched here again, this pretty much was already confirmed here, but when it touched here again and turned down, don't argue with it. You know you got a good trend line here, and start looking for your bigger pattern. You really probably might have already been prepared for this one, and for that reason, if you did see this line by now and you're paying attention, there's no reason you can't take that trade, that short right there. The only reason I really didn't mark it is because it had another inside bar that was a doji, but it's almost another bearish bar. So it's a little more aggressive for that reason, but there's still enough reasons to take that trade that I'm going to mark it at least in green, even though I didn't originally have it marked. And then it pulls back here. This is goes higher and then turns and goes right out the other side. That's another little trap. And if you're paying attention to the big trend line here, you know we're probably headed down an equal distance, and maybe it's even two-tiered, and you might even go all the way down to this level. We never really could get through this lower level, but I believe it is a two-tiered trading range. So then you get a failed second entry long right here. Notice the new high. You pull back first entry, pull back second entry, fails, turns down right off a midline there, which you may not have had that yet. There's even a short. I don't have it on there because I moved it, but let's look at this. There's a shorter term trend line coming down right through there. I hate when the chart gets all the but you can see it, and that's your first break, so you're probably going to push for another low, and we're probably headed to down here. And so this turns out to be a great trade. Comes back again here, but we didn't get a real good setup there, so I didn't mark that one. And now we've hit the lower side, bounce, you get a first entry, pull back. There's a second entry short, not a good one at all. Your signal bar is not, your original signal bar is not very good, and then this one just closes as an inside bar. So something's not right there. This thing should have taken off, and so when it reverses, you got the failed second entry short. I just, you want to go long there, and generally you wouldn't be trading both sides of this thing, but look how flat this is getting. And this is still kind of a, even though this is a downward bias, you're still operating within these two swings here, so it has really kind of a rangy feel with a downward bias, and so that's another reason you see some trades in both directions here, where normally you may not see that on a downtrend day like this. But yeah, there's a failed second entry short, and go long there, and then you get another one right here, same thing. Pull back first entry, pull back second entry, and then you got the move down and another push down there. And look at all that support across there, and that's that little one tick failed break lower. And just to make it easier for everybody to see, you can see that support right across there. We bounced there multiple times, and so you don't want to go short right into that. So when it reverses on a second entry long, I like that for a long. You figure we're coming back to here at a minimum, and we may keep going higher. And sure enough, there it goes. And that got you into the lunch hour, and you can see I kind of got flat into that lunch hour, waiting on that news, and then it comes out and it's all downhill. But that's what I saw today. Really good trading day for only a half a day trading, which is generally what I consider on an FOMC day is about a half a day. And something crazy happens and the price action's really good, and I didn't do, make any money that morning, or didn't do well that morning, I might trade it. But generally I'm done, and I try to be done by noon and don't take any new trades. So, but good trading day. Continues to be a lot of volume and a lot of volatility. Somebody asked me about maybe going to a little larger chart, but I really like this chart. So I've been liking this 6,500 with this much volume and volatility. So I don't see any reason to change. It's not moving so fast that you can't read it. That's the key. If it's moving too fast for you, then make yours a little larger. And for those of you that have asked about going back to the tick charts, if you want to, go back to the tick charts, but I can't, there's not much difference in them. They work. This is working just as good as the 2000 tick. It looks similar. I can't really tell that any difference in it. But if you like the 2000 tick, I know some people get anal about that kind of thing, and if you are, go back to the 2000 tick chart if you think it looks good. And I still haven't even opened one to look. I've been too busy, and I don't see any need to when this chart's working fine. So, but if you really like that 2000 tick chart and you want to go back to it, there's no reason you can't if it looks okay. So, but anyway, that's pretty much it for today. I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.